2021 IPO boom was a field day for retail investors and the companies which raised over $140 billion in proceeds. But as markets lulled in 2022, so did the market for listings. 2023 could mean a bounce back off of 2022, at least. According to Renaissance Capital, filing activity is up almost 27% from last year after Kava's big IPO and a volatile start for Vietnamese EV maker VinFast. Investors looking to SoftBank's Arm as the future of the market here. The chip designer is reportedly expected to start trading September 14th. If it goes well, it could open the door for other highly anticipated IPOs. You're taking a look at some of those logos on your screen. We're bringing back in Ben Laidler, eToro global market strategist. One of those logos I don't expect to come public, but it could happen, SpaceX, because Elon Musk has been very vocal about what he thinks about his companies being public. All that put aside, Arm could potentially open the door here. Ben, what do you expect?
Yeah, I think so. I mean, they're testing the waters, right? I mean, to your graph, IPO activity is basically 90% down since that 2021, boom. But just as we've seen sort of investor appetite improve this year, so we're now beginning to see company appetite sort of improving. So this is the big test, right? Arm, Birkenstock, Instacart. These are big IPOs. They're going to test, I think, investor appetite. So we'll see, right? Every IPO is different. We'll see what the pricing is. We'll see what we'll see the story they sell to in investors. But I think that that's the next step of of this rally, right? It broadens out to other sectors. It broadens out to other constituencies. The other point I would just make, though, this, however big the IPO pickup is over the next couple of months, is still a fraction of 2021. The number of listed stocks in the US is still down 40% off its highs. I think this is a supply and demand issue. There's a relative lack of supply for US stock and a lot of demand. And I think that's one reason why the US has the highest valuation multiples in the world.
So Ben, given where we were with the heyday of IPOs, what do you think investors are going to be looking for specifically as they look at these IPOs that are launching and trying not to get caught up in the fear of missing out?
I think they're going to want to see real dollars and cents, real cash flows. We saw in 2021, that at the top of the cycle, a lot of companies on a sort of hope and a dream and no cash flow coming to market. I think a lot of people have sort of learned their lessons from that. So I think we're going to be looking at dollars and cents, at least at this early stage of the IPO market sort of coming back. So I think it's going to be it's going to be very fundamental, down in the weeds. And again, this is very, very early days.
And it's clear they are looking for dollars and cents. I mean, if we're looking at some of the other data points here from Renaissance Capital, of the filings that have taken place, 118 of which there have been, 88 were industrial IPOs that were filed for this year. That's the most of any sector here. And so considering where the raise perhaps differentiates from the total volume that's representative of sectors here, where is it clear that investors might have to be holding out for some of the path to profitability? And in which sectors is it kind of the typical ones, if you would, in technology?
So I think that's a little bit of the test here, right? I mean, you've got Birkenstock on the one hand. That's a brand that's been around for a very, very long time.
Heavy technology there, Ben, yeah.
Well, right. And again, so within technology, again, Arm is probably a sensible place to start, right? It was listed for a very long time. It's a well-known story. They absolutely dominate the smartphone market. They have a 99% share of the smartphone market, and they're now getting into sort of AI, driverless cars, cloud. I can see, again, price dependent. That is an interesting story. Instacart, the numbers I've seen, they seem to be making money, now as well. So I think, within that sort of tech ecosystem, these are, some of the stronger, more cash flow generative, better known companies. So it makes sense that this is the sort of place to start, but it's all dependent on, the valuations, and we'll see how forgiving sort of markets are. As I said before, I think the path of least resistance is sort of up for markets, but I think there's still, a certain amount of nervousness out there, and investors are still going to trade reasonably carefully.
I mean, especially when you look at a company like Instacart, when you look at the competitive moat around them, I mean, you already have Amazon, you have Grubhub already sort of filling some of these things. And especially as customers are looking to, especially on things like groceries and deliveries, trying to cut back on their spending. How well positioned do you think some of these consumer focused products like an Instacart are going to fare versus, say, an Arm, for example?
Absolutely. I mean, Arm has 99% of the smartphone market, so they clearly have a bigger moat than Instacart does. But I think the U.S. consumer's in very good shape. And from what I know about Instacart, I mean, the business model has changed. I mean, most of the revenue is not coming out of what they charge for delivering your groceries. It's coming from advertising and other revenue streams. So again, to the extent that they are successful at diversifying those revenue streams, I think it becomes a stronger business with a bigger moat around it. But I think those are absolutely the questions to ask in an environment where at the margin the consumer is absolutely getting less strong here.
Ben, I think you made a great point in that it's really a bunch of household names at this time, or at least in this environment, that need to be the ones or could be the ones that have to be the standard bearers for opening up the IPO markets once again here. I mean, I love my Birkenstocks as much as the next person, but I do have a question for you, just regardless or regarding whether or not we should hold our breath for a SpaceX IPO.
The short answer is no. I'm sort of relieved. Given we've done stretchy pants, you weren't going to ask me about my shoe wear. But no, I would say no. He doesn't seem to need the money, and I'm not sure why he would put us all through the pain of bringing SpaceX to market.
Certainly already has enough on his plate, for sure. Vicky, thank you for joining us this morning. Ben Laidler, eToro Global Market Strategist. Great having you. Have a wonderful weekend.